In the next section of chapter 15, we focus on how to prepare or compute what's called our cost of goods manufactured and how to prepare financial statements for a manufacturer. Okay? The income statement. Using a periodic inventory system, which is an inventory system where we compute cost of goods sold at certain times throughout the accounting period, the cost of goods section would differ for a merchandising company compared to a manufacturing company, mainly because there are two different types of companies, and we'll talk about that. Cost of goods sold represent those items that were either purchased or manufactured, and they were sold during the course of the accounting period. Recall that when you first manufacture an item, your product cost is known as an asset. It goes into your inventory account, but once the item has been sold, that cost becomes an expense and goes to the account known as cost of goods sold. If I am a merchandising company, I am going to buy a product already in this completed state. So for a merchandising company, there's my beginning inventory, what I start off with, cost of goods purchased, which shows what we purchased during the current accounting period. When we add those two together and then subtract out what I have remaining in the inventory, that'll give me my cost of goods sold. So we're simply saying that if I begin with one item in inventory and then I bought 4 more items, I had 5 items total. If I only have 3 items left, then the cost of those 2 goes to what's known as my cost of goods sold. In comparison, when you have a manufacturing organization, you begin what we call finished goods inventory. Finished goods shows those items that were in their final stage or complete at the beginning of the accounting period. We look at what we call our cost of goods manufactured. That will show those items that we made and were completed during the current accounting period. We add that beginning plus what took place during the current accounting period, and we subtract out what we have remaining, which we call our ending finished goods inventory. That would give us our cost of goods sold. So you can see that for a merchandiser or for a manufacturing company, they both compute cost of goods sold. We just have a different way of calculating them because these are two different types of companies. Let's look at the income statement for a merchandising company and also for a manufacturing company. So again, with the merchandising company, you begin with your beginning inventory. You're going to add in your cost of goods purchased, which again shows the item that we purchased during the course of the accounting period. When you add those two together, they're known as your cost of goods available for sale. We're going to subtract out what we still have left, which is your ending inventory, and the difference between what was available and what we still have remaining. That difference is known as your cost of goods sold. In comparison, for a manufacturing company, we're going to show our finished goods inventory. That is the amount we had in inventory at the beginning of the accounting period, plus our cost of goods manufactured, which we're going to look at that. That shows what we produced during the current accounting period. And when you add those two together, it equals your cost of goods available for sale. We then subtract out our ending inventory, which is what we have remaining at the end of the accounting period, and that would give us what's known as our cost of goods sold. So let's take a look at the cost of goods manufactured. So we're going to focus more on what we call the manufacturing type of business organization. So your total manufacturing cost that took place for the year would consist of all your direct material costs, plus your direct labor costs, and your manufacturing overhead costs that took place in the current year. And if you remember those terms, go back, when you add those all together, that's known as your product cost. Then there's something called total work in process. We're saying, what is this? Well, work in process focus on those items that were not completed by the end of the current accounting period. They are still a work in process. So if we're producing, say, automobiles, if a car is not complete 100%, it's considered to be part of our work in process account. So we look at the work in process cost at the beginning of the year. We're going to add to that what's known as our total manufacturing cost. And when you add those two together, it gives you your total cost of work in process. We'll then subtract out our ending work in process inventory, which means the amount of items that are not completed at the end of the accounting period. We'll subtract those from our total cost work in process, and that would give us our cost of goods manufactured. Let's see it on an actual graph, shall we? All right. So here we begin with our beginning work in process. I got my little marker here. That's not working right now, so that's okay. So our beginning work in process, again, this is the cost of those items that we were working on at the beginning of the year. However, they're not 100% complete. To determine the amount of direct material that we're going to assign, direct material used, we'll look at the raw materials at the beginning of the year, plus any purchases will be purchased in the course of the year. You're going to add those amounts together, then subtract out what you have remaining. So this is showing what was available. This is showing what we have remaining, which means that we used this amount, $146,400. We're going to add to that our direct labor costs, and then we're going to add up those items that make up manufacturing overhead, indirect labor costs, that's factory repairs, utility depreciation, insurance. You add those items all together to get total manufacturing overhead of $54,800. So you add your material costs or material used, direct labor costs, and your manufacturing overhead costs all together. It'll give us our total manufacturing cost of $370,800. You're going to add that amount to your beginning work in process. When you add these two together, it gives us our total cost of work in process, the $395,200. So this is the total cost of all those items. We subtract out what's remaining, which is your work in process at the end of the accounting period. Subtract that from the total cost to get your cost of goods manufactured. That would total $370,000. So this schedule is known as our cost of goods manufactured schedule. It will show the total cost of those items that were manufactured during the course of the accounting period. And what happens now, because this amount is complete, this cost is now transferred from your work in process inventory account to what's known as our finished goods inventory account, meaning that those items are now completed and they're ready to be sold to the end user. Okay? So on the balance sheet for a manufacturing company, they're going to have three different types of inventory called raw material inventory. It shows those materials in their raw stage. They're not completed yet, so I'm not quite sure what these items are, but we can make a canoe. So whether it's some type of rubber, plastic, wood, what have you, these are raw materials. Work in process. Now you're going to add labor costs to those raw materials. So we're now in the process of putting those items all together. So work in process inventory shows those items that we have worked on. However, they are not 100% complete. They're only partially completed. Those items go into our work in process inventory. And then once we're all done, yay, those costs are transferred over to what's called finished goods inventory. So for a manufacturing company, inventory cost is transferred from raw materials over to work in process, and the final state would be your finished goods inventory. Now, for a merchandising company, remember that they're going to buy a product in its finished stage already, so they're only going to have one inventory account known as their merchandise inventory account. So here we have the balance sheet for a merchandising company. Notice that they only have one inventory account. But for the manufacturing company, we're going to show our raw materials, work in process, and finished goods. These are all different types of inventory shown on the balance sheet of a manufacturing organization. Okay? Let's switch gears a little bit and discuss the trends in managerial accounting. So now the United States has shifted more from manufacturing over to a service-based industry. And now it is known that over 50% of all U.S. workers are now employed in some type of service-based companies. Although the techniques we learn in manufacturing firms can be applied to service-based companies as well. So from a service-based company, we look at what we call the focus of the value chain. We still look at how can we provide a quality product in terms of a service to our different clients. So we streamline research and development costs, the acquisition of raw material, we look at production, sales and marketing, delivery, customer relations. So we're going to use different types of factors. So for a manufacturing firm, these will include the following, production, raw material, sales, and marketing. Now, of course, with a service-based business, we're not going to need raw material or production, but from a service-based business, we want to focus on quality management, making sure that we're delivering a product we call JIT, which is a just-in-time inventory system. This is a system where we don't even make a product as a manufacturing company until a customer has ordered it. That keeps us from having excess inventory just laying around in a warehouse. And we also now look at what we call total quality management. This is a system where we try to have pretty much zero defects in the production of our actual products. So we try to avoid waste, things of that nature. We try to avoid just having excess inventory laying around by using just-in-time inventory methods and a total quality management system. Okay, so these are the current trending topics in managerial accounting.